everyone. Welcome to this panel discussion on investing for the future. So my name's Eddie Donmez. I'm a global markets analyst at Finimize, and I'll just go down the row and everyone can introduce themselves.
Yeah, hi everyone. My name is Heloïse Greeff, and I'm a popular investor at eToro.
Hello everyone, my name's Michael Taylor. I'm a professional long-short UK equities trader.
Hi, I'm Anna Brading, and I'm founder of Mentora Money, which started as a social media following that I built in the last couple of years, teaching the younger generation the basics of financial literacy so they can get in a much better place and start getting onto the fun stuff like investing.
Okay, brilliant. Well, we've got a diverse panel here with different backgrounds, so it's going to be a really, really good conversation. But I'm going to start with a pretty broad question. How do you envisage the future of investing, and what do you think the key trends and innovations will shape investments going forward?
Yeah, so we've already seen a massive change in the retail investor space over the last few years. eToro does their market beat, where they do a survey of 10,000 individual investors, which is one of its kind. And through that, we really see the maturation of the individual investor, and fintech and a lot of these other platforms are really going to be driving what the investor wants. But I think at the key of that will be education and access to information, but more importantly, how do we synthesize that information and how do we make decisions from that information, because we're all constantly overloaded by information, but if we can utilize it and make the best decisions to ultimately make good investments would be where it's going, I think.
So I think one of the big things since COVID is people are now quite invested with the money, so they will look at trackers or they'll look at their own personal finance, and it's a big bonus because before that, nobody, my generation anyway, seemed really interested. But now people, because of the cinema in the US, I can't remember the name, GameStop, that's the one. People got really excited about that and realized that you actually can make money in the markets. So I think there'll still be a big cash inflow of private investors over the coming years.
I completely agree. I was going to say something similar. I think investing has become trendy amongst the younger generation. I see a lot more people wanting to know about investing, wanting to understand it better, and really get going at an earlier age, which is really exciting.
Yep, and I represent a company called Finimize, which is a financial information platform, and I continue to see really the democratization of institutional research for the retail investor with social media. I mean, I write all the time on LinkedIn for 166,000 people, and I bring this institutional research directly to the retail investing and institutional players as well, audience, and there's many others doing that. So I think that bridge between institutional and retail is going to continue to narrow, and we've got some great people that are doing that on social media and through eToro as well. One of the biggest themes in investing and technology right now is obviously artificial intelligence, right? You can't go a day without hearing about Elon Musk starting an AI competitor to OpenAI, people working on LLMs and generative AI to improve their investing, either investing directly in AI or using AI in their investment process. So, Heloïse, for you, what's the big difference? Because I feel like it gets kind of convoluted, the difference between investing in AI and investing with AI, because I know you do a lot of investing that way. Could you maybe break down that difference and what you use in your process?
Yeah, so that's a really key distinction, because the users can take advantage sort of from both sides. So if we're talking about investing in AI, that would be looking at companies that are actively developing or using AI in their processes. And these may no longer be the sort of traditional tech companies that we previously have. As the borders between tech and the infiltration of tech starts to change, there might be companies that are massively benefiting from AI, but we're not necessarily tech companies to begin with. And though there are a lot of opportunities to invest in these sorts of companies, there's also a lot of challenges. Number one being, how do you evaluate this? How do you evaluate that they are actually using AI, or are they just using it as some sort of marketing tactic? Because we see that a lot. I have personally written a lot of AI. I have patents in AI. I was a fellow at Oxford in AI. So we see a lot of investors coming to me asking, what is this AI? Are they actually using AI? And most often they're not. So that's the one side. The other flip side is, how do you use AI to maximize this sort of synthesis of information that I was talking about earlier? In my portfolio on eToro, I have bespoke machine learning algorithms that I have written and developed in-house to help make the cost of decision making cheaper and faster. So I no longer need a large team of analysts to help me make those decisions, but I can use AI to do that. And by not having that big team that's helping me make the decision, the cost saving in that is being passed on to the people who copy me on eToro.
Yeah, I think one of the biggest themes I'm watching right now is, I think with this availability of AI and democratizing that investment research process, I think it's going to level the playing field for the most part. But then you see these game-changing things like Bloomberg GPT that has 40 years of proprietary data of trades, of all this kind of information. And I'm slightly worried about that divergence of those that can afford that subscription are going to benefit massively. But I think it's going to be a huge trend to watch of how AI and all of this kind of democratization of the investment research process is really going to shape the future of investing. I'll pivot just slightly and talk about our long-term investing goals for Michael. How do we think that investors can adapt their investing strategies by incorporating a mix of individual stocks, ETFs, or other assets for basically securing their future success?
So I'm biased because I'm an equities trader, so I would always say equities. So for example, some people will say they want buy-to-lets, but if I wanted to do that, I'd probably do that through a REIT instead. But I think having a mix of small caps, I wrote an article in the FT which basically said 10 small cap stocks are enough to diversify away quite a lot of risk, especially if they're all uncorrelated. That's quite a risky strategy in the sense that, if you have 2 or 3 that are wrong, you can take a big hit on the portfolio. But for me, I'm quite young, so I can accept that risk. Obviously, the older you are, the less you want to be taking on risk. But certainly, I think if you don't want to pick your own stocks, ETFs are the way forward.
Anna, I might just come to you on this, because I know you work with a lot of the younger generation, let's say, maybe coming out of university. There may be some in the crowd now. How do you think about starting investing even? What are some of the things that people should have in mind before even looking at that?
Yeah, great question. I think there's a bit of a gap because there are lots and lots of people. We've got a bit of a problem where lots of people coming out of university, very well educated, landing some excellent jobs with a great income, and these are a lot of the people that I'm talking to, but they've never been taught the basics of financial literacy. With all their education, with their degrees and everything they've had, they don't really know how to handle money. And before they can even start investing, they can't do that if they're living paycheck to paycheck. And I'm not talking about people on low income, I'm talking about people even on high income jobs are stuck living paycheck to paycheck because no one ever really taught them how to manage their finances. And I think there is a bit of a gap there that needs filling so people can get everything in place, get everything done, so then they can move on to get into investing.
Yeah, and we see this, so forget even just people coming out of university. At Finimize, most of our audience is between 25 and 55, 60% in the Americas. And they need as much help and information as the people coming out of university, and maybe some bespoke, but I think one of the key things moving forward is going to be empowering people, right? So giving them the tools and the guidance for what they actually need, but not telling them what to do. right? There's with the democratization of information is going to be, more information, and that becomes curation becomes even more important. But empowering them to give them all the tools, but let them make their own essentially decision. So Anna, I'll come just back to you on the maybe specific initiatives that we can do, maybe for younger generations or even older ones, that can accelerate that kind of financial literacy and education conversation, let's say.
Yeah. I think there's two things that I would like to sort of raise. One would be, I'd like to invite everyone to think about where you learn about how to handle money. I was talking to a gentleman earlier, I think you might be sitting over there, who said that often we make mistakes, and that's how we learn about money. Wouldn't it be nice if we didn't have to make all those mistakes, but we actually had a place where we could learn these things to set us up for success instead of having to learn through mistakes? And I think that's the first thing I'd love to say, is just about where do people learn money? Where's the location? Where can they go? Is it YouTube? Is it a random influencer on social media? Where is there that's trusted and good with the right principles in place to help the younger generation learn things properly and well and thoroughly? And the second thing, I think, actually no, let's leave it there. You can move on to someone else.
Yeah, absolutely. I think the quality of information is extremely important, and where that's actually coming from. I think during the pandemic, there was a lot of TikTok traders and TikTok investors that were, basically spilling a lot of rubbish. And I think where we're going to move to is experts in the field, and they may be institutional, they may be those that have worked in institutions but come and have their own audience or own voice. But there's going to need to be some, let's say, regulation, more and more regulation on where this information is coming from, essentially. As we kind of look more towards the future of investing and trading and maybe even alternative assets and things like that, how do we anticipate the emergence of alternative investment platforms, even through fintechs, evolving to meet the needs of investors of all age groups, while addressing emerging opportunities at the same time?
Yeah, I think for the first time we're going through a very exciting phase where the individual investor has the opportunity to drive what is on offer for them. I think we saw that during the pandemic, where there was a large influx of money into the capital markets. Platforms like eToro saw massive growth in their user base. So people have become more familiar with perhaps, trading or investing by themselves rather than relying on a third party to do that. What might happen going forward is that mature part of the market will start demanding access to other assets. It might be through fractional ownership of art, of real estate, of private equity. I think we've seen a lot of great opportunities on display today, and I imagine we would see more of that going into the future. But then there'll also be this big tail of investors who maybe missed that first wave, and they are sort of tangentially getting trust in alternative platforms. They may have heard about them, but they didn't get on as first adopters. Now they're quite keen to get on, but perhaps they don't have the time to invest in figuring it out, in learning how to use it, but they do want to take benefit from the opportunities that are there. And I think that's where we'll see a big disruption of the second wave, which will be in the retail wealth management, which we haven't seen as much to date.
Michael, I might just come to you and get your opinion on that.
Sorry, could you repeat the question again?
The future of investing and alternative investment platforms, because I know you use a lot of different platforms.
So I think one thing you need to be careful of is having too much money in one platform, because a lot of brokers do go bust. And this is a risk that a lot of people don't really consider. The fact that their broker can go down and you can have positions that you can't actually get out of. So one thing I would say is look at the £85,000 limit, but also keep several funded spread bet accounts. So if a broker does go down, you can then go to a spread bet provider. Let's say stock A you can't trade in, but you're long 10,000 of it. You can go to the spread bet provider and say, I'm long 10,000, I want to hedge that exposure. And that's a risk that people aren't aware of. And I know it's a lot of brokers in the UK, they are FCA regulated, always check that. But I get messages from brokers and alternative platforms weekly who want me to sponsor them. But unless they're FCA regulated and I use them myself, I don't do it. So yeah, I would just say always check that they are FCA regulated.
Yeah. And staying on the maybe trading theme, because that's your background, in this ever-changing investment landscape, obviously seeing huge volatility in markets, this year, last year, worst year for the 60-40 portfolio, I think since 1932 or something like that. How can investors in this room and beyond anyone watching this maintain a balance between pursuing new opportunities, as you do, but managing their risk as well, with the goal of investing for the future?
So one thing that a lot of people don't really consider is that cash is a position. So let's say you've got a portfolio, Eddie, and it's stocks only, but let's say you had 60% of that in stocks. You are still sort of diversified because you've got 40% in cash, which is optionality to invest in other assets or just decrease the volatility of the portfolio. So you could actually take large positions in your best ideas, but hedge it with the cash, rather than diluting yourself across 30, 50 stocks. I mean, that's, I can't keep track of that. Some people have like 100 positions. You might as well just buy a tracker. So you can use cash to decrease volatility and also use it for other assets.
Yeah, I mean, cash has now become an asset class again, basically, and there's other assets as well. Over the last 10 years, it's been pretty much by the S&P, and it goes up. There's income in fixed income again. There's yield. There's cash is now an asset class. So, Michael, I'd like to just double down on what maybe opportunities do you see in the short term for this year or over the maybe longer term in terms of asset classes and diversifications? What kind of things get you excited outside of maybe stocks and bonds, let's say?
So I think crypto is exciting, but I'm not really very smart and I don't understand it, so I should probably learn at some point. But Bitcoin has been the best performing asset class of like the decade, so it's here. It's probably going to stay. So cryptocurrency, if I had to pick one, I'd probably pick that. AI is another exciting sector, but again, I don't know anything about that. So yeah, I guess we'll see.
Yeah, and now looking at these opportunities and the tax efficiency, let's say, as these kind of tax laws evolve and regulations evolve, how can investors stay kind of informed and adopt tax-efficient strategies? Because I know you've got a lot of experience in this.
So definitely use ISAs. There's a good trick you can use if you have a flexible ISA. You can fill it up right before the end of the tax year, carry it over, take that cash out, and you've carried your allowance over to the next year. So if you don't want to use your 20,000 allowance that year, put 20,000 into your ISA, take it out at the a couple of days later in the new tax year, and you've got that 20,000. But make sure it is a flexible ISA. Obviously, spread betting is tax-free, but you do pay a financing fee. Another thing you can do is create a company to trade through, so a limited company, and then you'll pay corporation tax, but you can bill expenses through that as well, and obviously pay yourself a salary and dividend. So there is a lot of things that you can do to decrease that tax bill.
Brilliant. And tax bills, tax efficient investing, AI. How do we bridge the gap of this with future generations, right? So I know, Anna, you spend a lot of time on this. How is the best way that we inform the next generation of investors on all of these, basic financial information, but markets-related stuff as well?
Yeah, brilliant. Coming back to what you said earlier, when the pandemic hit and people were online all the time, people were really learning off of random people on the internet they'd never met. And we do have all this access now, the younger generation do especially, to information. But how do you know that's the quality information that you need? And I think you can go Google whatever you like, but there's nothing like sitting in a room with somebody who's got experience, years under their belt, and knows what they're doing and is proven and tested for years. So for example, at an event like this, I'd love to see more young people here rubbing shoulders with people that have been investing for years, been successful, got stories to tell. And I think that's one of the things that I'm trying to do with Mentora Money is bridge that gap, bring the older generation who are very experienced, done amazing things, bring their stories to the younger generation so they can learn. And it's not this separated thing, it's not something that's separated by a screen. You can actually come together and sort of harness that information and experience for the younger generation.
Yeah, and just on this panel, Heloïse, I'll come to you. I'd like to just, we were chatting before and so interested to hear your story. Can you just talk a little bit more about what you're doing with eToro and what you've done, how you started, where you went to, and could this be a way of, the younger generations learning by not copying, but watching people like you that have maybe come from non-traditional backgrounds? So yeah, what do you think on that?
Yeah, so I mean, my background is basically in engineering, and I was telling Eddie I did AI long before it was AI, when it was called neural and fuzzy logic, and I literally had an intense desire to invest because I understood the mathematics behind compounded long-term growth, and so joined eToro, started my portfolio, used AI to assist me because it's the tool that I knew. But eToro then reached out to me and said, would you be willing to make your profile public so that other people can copy you? And it was something that I was very uncomfortable with at first because I did not see myself as a traditional finance person. I didn't come from a finance background, but I had a 4-year track record to back up what I was doing on the platform. And so I always encourage people, even if they don't want to copy a popular investor on eToro, to just follow them, because that's for a great way how I learned for a long time. I would go onto somebody's portfolio, see what they're doing, because there'll be a piece of news that's coming out and I see somebody bought that stock, and I'll read the same piece of news, but I'll have a different interpretation of it. And when you get to the point where you're okay to disagree with another investor, that's when you sort of have the confidence to know that you're on the right track, and that's what the capital markets are about. I mean, we all get different triggers, but we all decide whether we buy or sell or don't do anything, right? So yeah, it could definitely be a great learning tool for people to come onto the platform.
And Michael, I'll just come to you, because maybe different from the social investing and copy trades, we write a lot on LinkedIn, right? We write a huge amount on financial markets and investing and trading. Where did you learn, and what could you take going? What are you trying to do on LinkedIn? And could this be a good way to inform future generations on finance information and trading?
So when I first started, I had no clue what I was doing, and obviously lost money at the start. But I read a lot of books, went through YouTube. I mean, there is a huge wealth of information, and then since COVID, we've seen a rise of influencers. A lot of them not kosher, because you've got people saying you should always buy dips. I mean, that's not a good strategy, right? Because when it doesn't dip, then you're holding a losing stock. But I think in terms of LinkedIn, there's quite a few sensible people, such as yourself. I follow you for the market updates, and also to get your view on it as well. So I get a lot of information from a lot of people, and then I take a view on it, because you shouldn't ever follow anyone, blindly. I mean, nobody gets it right. I mean, I certainly don't get it all right all the time. But by following people from various platforms, and as you said, you can read different views and disagree with them. But the thing is, someone might have a long-term view on a company, and it might be bad news, but you could short it, make money in the short term, but in the long run, that investor also wins. So the idea that the market is like a negative sum or a zero-sum game just isn't really true, because everyone's got different time frames. And you need to really remember that when you're listening to someone or reading what they're saying about a company.
Yeah, absolutely. We're kind of heading into the last few minutes of this discussion, and of course, investing for the future is the name of the topic. So could you just have some maybe closing remarks on what things are you excited about, the development of technologies and investing for the future? What are some of the challenges? What are some of the opportunities that you see as the biggest? Maybe I'll start all the way along and come to the end.
Yeah, I think I just come back to this idea of mentoring and bridging that gap between the older generation and the younger generation. I think there doesn't need to be such a gap. I think it would be wonderful if there was more connection between the two. I think it's brilliant that the younger generation are excited about investing, they're interested in it, there's loads more information than there was, and I think that's going to set them up well for the future.
Michael, I'll go to you.
So I'm quite excited about capital markets in general because, the idea that markets are efficient is like a complete lie because, if they were efficient, people like me wouldn't be able to make money. So there's always going to be opportunities out there. The suits will always say that you need to go with their funds to make money, but actually you can pick stocks yourself and make money. And if you do the work and, look at your own edge as well as being sensible with risk management, don't go all in on like one stock. There's opportunity out there, so I think it's really exciting.
And Heloïse, maybe I'll come to you.
Yeah, I can only add to what both of you have already said, but definitely one big thing for me would be AI. I think a trend that both of you have mentioned today is access to information, but at the same time that can become very overwhelming if you are constantly overwhelmed. How do you assess that information? How do you do that research? So things like generative AI, like the chat GPTs that we're seeing, is making it more accessible for the average user to interact and use AI if we're able to do it responsibly, if we're able to use it as a decision support tool in making our investment decisions rather than relying on it as, the goose that's going to lay the golden egg, because I don't think it's there yet.
Yeah, I think I'll take a slightly macro view. So I think zooming out, the next 10 years are definitely not going to look like the previous 10 years. There's going to be a huge amount of opportunities in things other than US tech stocks. I think the energy transition, I think AI, I think emerging markets, alternative fixed income, the democratization of private markets. I think these are all really, really exciting trends that is going to level the playing field and give opportunities to retail investors that essentially did not exist before. So I'm really, really excited about some of these major themes, and I think there's a huge amount of opportunity here for people that are all learning. And with that, I think there's a huge opportunity as well for education. So I'll leave it there with education, the education around fixed income. Fixed income's not as sexy as equities, but there's a huge opportunity there. There's going to need to be a huge amount of education around the energy transition, sustainability, private markets. And I think that's how we essentially empower the next generation of future investors and secure our long-term futures. So with that, I'd like to thank the panel for this session and thank you all for listening.